as conflict between Israel and Palestinian Islamist group Hamas continues. Palestinians gather at site where Israel attacked houses in northern Gaza Strip. The 23rd of October 2023. Economists have warned that any possible escalation of the Israel-Hamas war would pose a major risk to the global economy, driving up energy prices and disrupting key trade routes. Diplomatic efforts by a number of international powers have intensified in hopes of containing the fallout from an October 7 attack on Israeli civilians by the Palestinian militant group Hamas. Israel's subsequent ardment of Gaza in an attempt to eliminate Hamas increased risk of the incident spreading to wider Middle East region. A full-scale debate. Recent events have deepened deepest fear among economists that conflict is engulfing region and beginning to pose a long-term threat to global energy and trade infrastructure. Pat Thaker, director of Middle East and Africa, said any conflict in Middle East causes convulsions to world economy because region is a crucial energy supplier and, secondly, a key shipping transit route for global trade. Region at the Economist Intelligence Unit told CNBC on Thursday. Oil and shipping route risks the extent to which oil prices will increase and its knock-on effect on global economy will be directly proportional to how well the conflict can be controlled geographically, Thaker said, adding that oil market is currently in a tight situation following the Saudi-led OPEC production cuts. He also noted that the war began during a time of tremendous economic uncertainty as the war in Ukraine continued to intensify and central banks reached a turning point in their monetary tightening cycles. For economies that are already in recession or headed for one, further interest rate hikes by Fed and the European Central Bank could push them into abyss. Thaker told CNBC via video link. We faced with a double whammy here. Energy prices are high once again. But the same time inflation is moderating but not radically falling at a time when interest rates also the highest level we have seen in several years. Oil prices initially jumped after Hamas launched surprise attack on Israel, then softened slightly. But Brent crude futures were still trading around 89 a barrel in Europe on Wednesday morning, while West Texas Intermediate futures were trading just below 84 barrel. Thaker predicted that in the extreme scenario of a regional rally, markets would have to struggle with Brent above 100 per barrel for an extended period of time, meaning higher global inflation, softer economic growth and pretty much recessionary conditions. Iran's oil production, the world's eighth largest crude oil producer, would be at risk in the event of surge, especially if Tehran is subject to a renewed tightening of U.S. sanctions. Strategists at Safra Sarasin said in research note on Friday. They estimate this will result in the loss of as much as 1 million barrels of oil per day.